Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. While viewing the Australian dollar, the bulls continue to focus upon the top side, with the resistance still holding at 72.50. In light of the pattern, still keep an eye on this level, as previously we did get a spike here and the market did actually retreat for 3 days. But in light of this slightly stronger pattern, a break of 72.50 could see a rise back up towards this top side of the range around 73.15. So still be on your guard in case we get that short squeeze. And if the market is called a little bit short after breaking above the 60-day moving average, then we could see that short squeeze. However, we are a little bit overbought, so I do anticipate the dollar index, which measures the greenback strength against a basket of 6 major currencies, to start regaining momentum. So therefore, we have to keep an eye closely on this level at 72.50. The euro took another stab at the downside and at the level of 113 the figure, and was respected but weakened in light of the technical pattern still remaining heavy and married to both the MACD and the RSI. I do feel that the market will take another challenge to the downside and possibly break it. If so, does expose the way towards 112.15.25, and with the downside target recently challenged back in January around 111 figure 35, which is the preferred call. A bit whipsaw price action in dollar yen overnight as the market starts to turn a little bit more its attention to the Russia-Ukraine crisis. Still, one thing to make a note on is that we should not forget that next month is a very important an event risk. As we head closer to March, the US federal rate decision is that the Federal Reserve has left the door open for anywhere from a 25 to a 50 basis point rate hike. In other news, US Federal Reserve Governor Michelle Bowman suggested that a 0.5 percentage point increase in interest rates could be on the table next month if the incoming inflation readings become too high. So let's see how the market looks in terms of the direction. At the moment, with a little bit weaker, I feel that the yen aspect and the rebound of 114.70 could see a squeeze back up towards the region of 115.50 and then take a challenge back to that downside support at 114.65. Sterling still very much a lackluster price action, but the indicators are breaking down. In light of that, the view is called back towards 135.40 and reassessed from there, with the base holding around 134.60-70, where I feel the market will rebound. I have this feeling that the market's probably not getting too bearish due to the fact that there is a potential rate hike in March from the Bank of England, and therefore could see a further test back to this top side of the range, which eventually I feel will turn out. Sterling Kiwi. Well, the call since the break of the trend line was at 202.70. Well, looking at the where the market is, it's traded at 200.63. So the target was reached. Now we're trading at 200.85. A close under 200.70 would see further risk towards 198.50-80 and reassess. Overall, though, the bears are still weighing on this market, so I still feel there is a bit of a downside risk. Well, now getting into the fourth daily Japanese candle, which is bearish, along with bearish divergence and also an overeating ADX, the market looks destined to back away from that top side anywhere from 1,900, and if the bearish divergence does kick in strong, then we should see a move down towards 1,879, which is starting to strengthen up as that call, and if so, reassess from there. And also the stab to the upside at $94 a barrel for oil didn't sustain and therefore tumbled quite heavily. In light of this breaking down pattern and the divergence from last week to the bear case and married up to the negative MACD, I feel that we are looking back towards $86 a barrel and reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the rest of the day.